Hello, so today let us learn what are the CNBC updates, and the first headline goes as the Dow rises on strong earnings, but the Nasdaq falls for a fifth straight day. So what does it mean? So big companies have been reporting their quarterly earnings this week, and some of them beat expectations, which pushed the Dow up. But chip and tech stocks kept sliding for fifth day in a row, and it is dragging the Nasdaq down. So investors are nervous about these two big upcoming events. How much big tech is spending on AI and the Fed's interest rate decision. So let us break down this every piece of this. So this Dow its full name is Dow Jones Industrial Average. It's not a company, it's a list of 30 large well-known American companies like Apple, Coca-Cola, Boeing, McDonald's. So whose stock prices get averaged together into one number. So when the headline says the Dow rose, it means that the basket of 30 companies went up in value on average that day. Think of it like a report card average across 30 subjects. One subject failing doesn't necessarily bring the average down if others did well. Similarly, this is the Nasdaq is another index, but it tracks thousands of companies, especially the heavy tech ones. So when the Dow rise but the Nasdaq falls, it usually means all economy companies did well, while the chip or the tech companies struggled. And this chip stock, these are the companies that make semiconductors that are like tiny electronic brains inside the phones, computers, cars, and AI. For example, Nvidia, AMD, Intel. These are the companies which come under the chip and semiconductors. So they are currently very sensitive to news about AI spending because the AI data centers need huge number of chips. So what does the earnings means? So every 3 months, public companies must report how much money they made to investors. So this report is called an earnings report. So if a company makes more profit than analysis expected, the stock usually goes up. So if it is less, it usually goes down. So the Fed, what is it? So it's very short for the Federal Reserve, the US central bank. So it does not sell anything to consumers. Instead, it controls the cost of borrowing money for the entire country by setting a key interest rate. So when the Fed is rising its rates or loans for say mortgages or credit cards or any kind of business loans, it gets more expensive. So which is tending to slow the economy down. So when it cuts the rates, the borrowing gets cheaper, which is tending to boost spending and stock prices. For example, let us do a simple math. If the Nasdaq lost about 0.5% each day for straight days, starting at 20,000 times, so it would be 20,000 times 1 minus 0.005, which is like 0.5% interest. So it's over the 5 straight days. So it would be around 19,502 points. That's a total of 2.5% over the week. And these small daily tips can add up to something meaningful when they happen repeatedly. And it's a concept called compounding. So this is the whole scenario about how the Dow is rising on strong earnings and the Nasdaq falling over the fifth straight day.